In this video, I'm going to show you how easy top-down analysis can be. I know that with ICT, you've heard so many things: PD arrays, IPTA, daily bias, so many things, and you are confused because you want to take a trade, but you don't know how to do it. So in this video, I'm going to simplify to you ICT top-down analysis by giving you a plan, giving you questions for you to answer, so you are then able to apply it on the charts. Not only am I going to show you the questions and the path that you have to take, but I will also apply that with you on the charts. And right now, the waitlist for the Simple Trading Edge is open, so if that is something that interests you, then check the first link in the description. So now let's go onto the screen. The goal is to simplify ICT top-down analysis. So I will show you how we go from the weekly all the way into having a trade. And this trade was a trade that I personally took and the members inside of the Simple Trading Edge also took, which, by the way, waitlist, link in the description. There's 3 questions that are extremely important for us to ask. Number 1 is, where is price? Number 2, where will price go first, which means what zone do we want to trade? And 3, where will price go after, which is our target? Because afterwards, we just need to start doing our top-down analysis and mark out all of the PD arrays, which are premium and discount arrays for the people that don't know, instead of overcomplicating ICT, which I see so many people doing with order blocks, rejection blocks, mitigation blocks, I don't even know how to say this one. I do. It's propulsion block. But so many people complicate when you can keep it as simple as fair value gaps, order blocks, highs and lows. These are the magnets of price. Price on a bearish trend is first going to be looking for a bearish PD array, which in this case can, for example, bearish fair value gap. And then the target is going to be the high and the low. And afterwards, you will also see that we will be targeting higher time frames. What? Fair value gaps, order blocks, and highs and lows. And that is really how the market moves. The same thing when we are on a bullish uptrend. The market is constantly looking for a bullish PD array and then a bearish PD array to target. But let's not go this quickly. So you focus on fair value gaps, order blocks, and highs and lows. When you are trying to simplify ICT, don't worry too much about all of the possible order blocks that you can have, all of the possible fair value gaps, SIBI, BISI, whatever it is. Just keep it simple. And that's what this video is going to help you with. Then you go onto the higher time frame and you start looking for these PD arrays, right? You will mark them out. And then what are the questions that you will ask yourself? Where is price currently in? Where will price go first? And where will price go after? Because this is what we call a simple power of 3. So what is this candle? This simply means that the market moved up. It tapped a higher time frame PD array, which is what I'm asking you to look for here. Where will price go first? And then the market started moving in our direction and targeted, let's say, a big low. And that is, where will price go after, which is our target. So our goal will be go on the lower time frames and actually look for entries. But this is where we are going to be day traders. Instead of looking at the weekly, we want to know where the daily is going to next. So you look for, where will price go first? So where do you want to trade on a particular day? And what is the target on that particular day? And that's where you go onto the lower time frames. And in the lower time frames, you will ask yourself exactly the same questions. Where is price? Where will price go first? And where will price go after? Because that will give you the zone you want to trade in and the target. And then that's where we go into the execution, because you wait for price to hit the high probability level, which is where will price go first, the zone you want to trade. This is what I call the high probability level. And then you wait for price to displace in your direction, which means if you are bearish, you wait for the market to displace and you execute on the closest PD array. So it either is going to be this order block right here, or it's going to be a fair value gap down here. So you set your entry, stop loss above the high, and eventually the market tags you in and goes towards your desired target. So this is how simple you can keep it. And if you want this exact framework, then check the second link in the description. I will give you all this chart right here for free, no strings attached. But this is how simple we can keep it. 3 simple questions from higher time frame to lower time frame. So now let's jump onto the charts and see how we can apply this and how we could have taken a trade based on this. So we start off on the weekly, and on the weekly, this is $, by the way. What we can see is that we are approaching this weekly low, and eventually eventually we will be targeting this low, but this is going to be my first target. That's first of all. So I already know where I want to see price going to. And then when I'm looking for a PD array, I don't see anything clean right here besides the inverted fair value gap right here. So on the weekly, where will price go first? I want price to go back into the inverted fair value gap. And where will price go after? I want the market to go towards this low. So now onto the daily. On the daily, this is where we have way more clarity, because on the daily, we can already see that we formed a bearish order block right here. So let's reduce the opacity on this one. So the question remains the exact same, which is, where will price go first? So what zone do I want to trade? Well, I want to trade inside of this order block. And what will we target after? Well, if I enter a trade on this order block, I am likely just going to be targeting these lows. But then on the day, we decide. So I want to see the market go higher first and then lower. That is my forecast for the week. So now, what is my job? My job as a trader now is to wait until price goes into the high probability areas that I'm looking to trade. And a lot of people might say, well, but if you're looking for the market to move up, then why not take longs? Yes, you can take longs, but the problem is that then you are overcomplicating. And my goal here is to simplify ICT top-down analysis. So let's see, Monday, we had this big push to the upside. We are heavily bearish, right? This is the high probability zone we want to trade from. Not only did we tap the closest daily order block, but we also tapped this huge one up here. So what I'm thinking here is that it's time to look for a trade. And this is where I can already see, okay, there's very clean highs up here that might be targeted, and this is where right now I am already hunting. So we tapped the extreme 4-hour fair value gap. We tapped all of the PD arrays. So now I want to look for a lower time frame confirmation. What do I want to see? Well, I want to see where price is right now, where will price go first, and then where price will go after. So once the day opens, what am I looking for? Well, this right here is the daily open. I want the market to go up. Where? Towards the higher time frame PD array again, which is the order block, which we just tapped again. So if you go on the daily, if we have this in blue, I want us to tap the order block and then starting to break lower. Well, why? Because now we're already in the executions tab. Wait for price to hit a high probability level, which we just did. So that is done. High probability level done. Wait for price to displace in our direction. That has not happened yet. So now we wait for displacement. So we go on to the 15-minute, and this is where we start seeing the market displacing. Now, you ask yourself, we just flipped. If you want to be aggressive, you can enter here. But I like to wait a little bit more. So we have this big push lower, and now we are in London session. 3 a.m. Eastern Standard Time, we have London session. We have price hitting a high probability level, displacement in our direction, and then executing on the closest PD array. Well, the closest PD array is this order block right here. If you don't want to enter, obviously, in this first order block, which you could have already done. So now you put your stop loss above the high. Then you ask yourself, what do I want to target? Well, for me, I personally target this accumulation. And the reason for that is because I'm an intraday trader. I am not trying to target 100, 200 pips moves, because I know that for that, I need to hold overnight. And so for me, what I do is I have my trade set up like that. Then let's see if we get tagged in. We get tagged in, and the market then moves in our direction. And it tags us out and it continues going. But at the end of the day, I don't really care. Could I have held this trade all the way towards this low? Yes, I could. But for that to happen, let's see. So this was my TP right here. Let's see how much longer it would take for us to reach this low, which I still think we are going to reach. Why? Well, let's look at the daily. This is where we can apply the same analysis all over again. So now we just had the bearish reaction. Where do I want to see the market going first? I want to see the market going a little bit bullish and then back to bearish. And notice how we have this tiny fair value gap right here. So let's remove this. I want to see the market going up. It didn't tap that fair value gap, but we swept this high. What do we have? Displacement, tap, displacement, perfect tap, and then we go for the lows. So I would have had to hold this trade over 24 more hours and have the possible likelihood of the market pulling back. And notice how. Would you be unhappy with 3.64R? I personally wouldn't, right? So I personally like to target something that I know will be hit in one day, either that or I am wrong, so that I can go into a new day with a fresh mind and I can execute on exactly what I'm looking for again. And that is how I simplify ICT top-down analysis. Again, you notice that all of this is just focused on 3 questions: where price is currently, where will price go first, so what zone I want to trade, and what will price target after. Those are the only questions that I have, because like that, I can have a very consistent framework that I can apply day in and day out. So I hope you guys enjoyed. I hope this was helpful. Make sure to check the first link in the description if you want to join the waitlist for the Simple Trading Edge, which is something I have been working on for the last 1 year. I've already let a couple of students in and their results have been absolutely amazing. A lot of traders have already become profitable. A lot of traders have taken this particular trade I just showed you because they have a Simple Trading Edge. Just check the first link in the description. I hope you guys enjoyed and I'll see you in the next one. Peace.